You're listening to international investment advisor Doug Goldstein on the Goldstein on Gelt show, the financial show where we'll talk about how you can make the most of your money. With all the confusing financial chatter bombarding you each and every day, Goldstein on Gelt will give you the practical information you want and need about living a financially stable life. Here's your host, money maven Doug Goldstein.
Okay, we are back. We are talking with Jason Best and Sherwood Neiss, who are partners of a company called Crowdfund Capital Advisors. Gentlemen, a pleasure to have you.
Thanks. Great to be here.
Great to be here. Thank you.
Before we get into all the details, could you just give us a little summary of what crowdfunding is all about?
Sure. Crowdfunding is where a large group of people take small dollar amounts and they help fund a person with an idea. So in general, this has been used for mainly charity-related events or walks for cures for breast cancer, that type of thing. It's used for political donations. And now, most recently, it's been used for art-related campaigns on websites like Rocket Hub. And what we've done is we've translated that into the business sphere to allow people to invest money into businesses for a small piece of pie.
So it's like an IPO, but it's easier?
It allows small private companies or entrepreneurs to be able to raise capital so they can either grow their businesses if they have an existing business, or to be able to start to build a business if they're an entrepreneur with an idea and a business plan. It really is an opportunity for because with the financial crisis, it's much harder to get access to capital through banks or maybe traditional places. And so what this allows you to do is leverage your social network via LinkedIn and Twitter and Facebook to be able to raise this money to allow you to build your business and hire people and create innovation.
So it's basically people who maybe are not quite ready for prime time on Wall Street, but still need to raise capital for their business.
Yeah, this definitely fits a funding gap that is out there. So traditionally, businesses that need $0 to $250,000 in capital have to go to their own pocketbooks, their credit cards, their home equity lines, their traditional sources for capital. That money's dried up since the collapse of the financial markets in 2008, so it's been a lot harder to get that capital. So this allows you to go to your social network and say to them, hey, I got an idea for a business. Here's the business model. Here's how it'll make money. And here's what I think is a good investment opportunity. And it allows them to decide, are you worthy of an investment? Are you a trustworthy person that can communicate and live up to what you say you're going to do? And for them, is it a good investment opportunity for them to make?
So what sort of companies would this be appropriate for? Is this from the 0 to 250 level, or could it be bigger companies as well?
Well, what's interesting is this is really gaining a lot of appeal with small to medium-sized businesses. And so in the U.S., the legislation allows us you to raise up to $1 million per year through this capital raising facility, through crowdfund investing. And so we definitely see this as being very, very appropriate for Main Street businesses, because there are many Main Street businesses, the dry cleaner, the restaurant, etc., that may be profitable, successful, long-time businesses, but may have a very hard time getting working capital loans or capital to expand their businesses from banks or other financial institutions. This allows people to use their customers and to engage their customers to become investors and passionate brand supporters to be able to raise that capital and grow those businesses. It also has a lot of appeal for high-growth businesses. So the typical tech startup that people tend to think about when they think about entrepreneurs. And in this case, as you and your listeners are probably very well aware, when people go to angel investors or venture capitalists, the response that those groups give to entrepreneurs about 99% of the time is no. Mm-hmm. And that's because for a range of reasons. Sometimes it's a not fully formed idea, but many times it's a great idea. It's just not ready for professional investment yet. And so what crowdfunding can do is provide us an on-ramp to professional capital, because many times what a VC or an angel investor says is, look, this looks great, but I need you to go get a customer, go build a prototype, go launch your website, go create something, and then come back to me. And what crowdfunding says is, I can now go out, I can raise $50,000, $100,000, $500,000 worth of capital. I can do those things, and I return to the angel investor and can say, look, I've done this. I've raised capital successfully. I've launched my site successfully. I have a customer. Now my business is worth more, and now I'm ready for professional investment.
So we're really talking we're talking pre-angel, which to me sounds like it would entail a lot more risk for the investor.
Oh yeah, we make no qualms about this. Crowdfund investing, like any startup investing, is the highest risk form investing out there. If you're going to be playing in this space, you should only be playing with a small percent of your portfolio. Portfolio diversification is the way in which you prevent against loss. So if you're going to be investing in startups and small businesses, make sure it's less than 10% of your overall portfolio.
Okay, that sounds like a lawyer wrote that for you, but it sounds good. We're talking with Jason Best and Sherwood Neiss, who are partners of Crowdfund Capital Advisors. They're bringing a new concept to raising money to people who are at the very, very early startup stage. So can you give me an example of a company that might use your services?
Sure. I mean, as far as for Crowdfund Capital Advisors, the type of organizations we are working with are venture capital and angel investors who are looking to understand this crowdfunding space. And so how will we as professional investors begin to work with companies who've used crowdfunding in the past? Or how can we look at this market as an opportunity for further investment in this space? This is a new space. We look at crowdfund investing really as Web 3.0. This is where the social web, or Web 2.0, meets capital formation. And so it's really an opportunity to invest in that space. A couple of other entities that work with us would be governments in other countries, the United States, as well as regional development banks and other NGOs who want to use crowdfunding as a way to further their goals and really support the initiatives they already have in place.
Mm-hmm. So you mentioned something earlier about the regulators allowing up to only $1 million of investment capital. How do they see this, and where do you think you will fit into the regulatory map?
Well, so we're working very closely with the SEC and FINRA right now, and they're the oversight and governing bodies for securities in the United States. The legislation prescribes how this will function. The oversight requires that these portals are registered with FINRA so that they can make sure that you don't have fly-by-the-night portals popping up. And they're restricted on what they can do. If you're a broker-dealer, of course, you've got the full peer view of a broker-dealer, and you can go out and curate deals and look for investors. But the type of funding platform is just called a funding portal. And that would be just really a white label funding platform that does nothing that a broker-dealer does, where it's just sort of pitching ideas, the ideas go up, and the crowd decides whether or not it's worthy of funding.
Okay, so let's say a company comes along and wants to raise some money, an early stage company. What percentage of their net worth would they sell off? Presumably it's either, we've spoken more like about shares, but you also do debt offerings as well.
Right, and it would really depend on the need. So if I'm a restaurant and I need to buy some new equipment for my kitchen, let's say I need $50,000 to raise for that, I would know what the value of my business is because my accountant would be able to tell me, and I would say, okay, what percentage of that value is $50,000, and then that's the amount of money that I would propose to raise, whether through a debt or an equity offering.
Are they able to have different shares of classes, so they're preferred and common, so that people will not necessarily either have voting rights or dividend rights?
So the SEC is determining what sort of shares will be allowed in crowdfunding right now. We think that there probably will be some ability to do that, but our position is we'd like it to be as straightforward as possible for investors because we don't want to get it into derivatives or very complicated financial instruments. We want it to be very simple and straightforward for everyone to be able to understand.
So is there an offering document that investors will see that the companies have to prepare?
Right. The offering document will be for listeners who are familiar with the current perks or rewards-based crowdfunding today, like Kickstarter or Rocket Hub. That's sort of a beginning point to think about an offering document where you have a pitch video and documentation about what will be done with the funds. So what will happen on the equity or debt side of that thing? There would still be a pitch video and description, but you'd also have what's called a deal room, so a place you would log into for serious investors to be able to look at financial information and detailed information so they can make a full determination about whether or not to invest.
And all of this will be recorded on term sheets and what we commonly known as offering memorandums. So it'll be summarized on there. So all these fields will be consolidated down onto standardized forms that will be used by everyone.
I see. So the company that wants to go out and raise the capital is going to have to do a great amount of disclosure in order to get people actually to chip in and buy a piece of the company.
That's correct.
So would this be awkward? You mentioned before, you spoke about the companies going out to their social network. I presume that that's the model, as opposed to a company wouldn't come to you and say, hey, can you go market this to 1 million people? You would say, well, we'll set you up, but you have to send it out to your LinkedIn or Facebook group.
What's interesting is, this, crowdfund investing, it provides a kind of a new and innovative way to raise capital. What we also see is there's going to be a lot of innovation that happens around this concept. And what you had just identified, one of the areas that we're already seeing is there are companies who are calling themselves crowdfund accelerators, who say, we will come in and run your campaign for you because we're experts at running a social media campaign to raise capital. Mm-hmm. And so I think that people will either do it themselves or they will do it through people who have that expertise. What we're seeing is that it is it is definitely not just I'm going to hit the send button on an email to all 1,000 people in my address book. There definitely is a campaign mentality that has to be carried out to be successful.
Mm-hmm. So you really have to be either an expert yourself in social media or require a company, as you said, like one of these accelerators to get you out there. Otherwise, you just won't raise the money.
Yeah, the keys to success in crowdfund investing are a great idea, a transparent entrepreneur, a great business model, and a very strong social network that's got capital to support all of your ideas.
And if you're not an expert yourself, finding maybe a niece or a nephew or a son or daughter who is.
Is busy on Facebook. So what concerns should a small company have about going ahead and raising money through crowdfunding?
Well, there's several. I mean, the first and foremost is you need to be organized and transparent. The very first thing that you're going to have to do when you register to do crowdfund offering is to give out all of your personal information, your name, your social security number, your date of birth, your address, telephone numbers, any identifying information. So if you commit any fraud, we and the SEC and the IRS and everyone else can come and find you. So you have to be a very transparent individual. And this is not replacing any of the steps that you have to go through in starting a business. You have to incorporate the business before you get started. You have to have a bank account to get going. So it's going to require some capital up front. And you have to sit down and get a business plan done. So if you're a smart entrepreneur and you think that this is a great way to access capital, you're right. But you're going to need to socialize your idea with your community before you raise any money to see if, in fact, they think it's worth your time to go through this entire exercise.
This is Jason, too. Just to add to that, I mean, when you're providing your personal information as an entrepreneur, your social security, date of birth, those sorts of things, mm-hmm. Those are used to conduct background checks, criminal fraud checks, and securities fraud checks. That data isn't sort of displayed on the internet, but it is required because they want to make sure that there's a vetting process that goes on so that when people are on the platform, that they are legitimate businesses with legitimate business people.
I think that's very important. It's good that as you're starting in this new field that you're making sure that all those I's are dotted and T's are crossed, because that's what people come to expect from Wall Street. They expect that's already done, and you wouldn't want this to turn into sort of a rogue fundraising system that criminals go to raise money. It sounds like you're on the right track.
I think that you bring up a really good point too. Crowdfunding for a lot of people might be something new, but if you look at it, it's been around for thousands of years. In essence, that's the way communities used to finance everything, by pooling their money together. But most recently, Kickstarter, it's been around for 5 years. So we've been seeing this industry grow over the past 5 years. And the fact of the matter is there's zero fraud in it, because the crowd and the crowd diligence uncovers any nuances that are going on in the space, and it shuts down any fraud.
Yeah, exactly. So there's been a couple of instances where people have tried to perpetrate fraud on Kickstarter or Rocket Hub, But the combination of the sophisticated algorithms that they've put in place to look for pattern fraud, as well as having hundreds of eyes looking at a deal, is very powerful.
All right. Sounds like a fascinating model. We've been talking to Jason Best and Sherwood Neiss of Crowdfund Capital Advisors. Gentlemen, the last few seconds, just tell me, how can people follow your work?
On www.crowdfundcapitaladvisors.com.
www.crowdfundcapitaladvisors.com. Jason, Sherwood, thanks so much for your time.
Thank you so much.
We had a great time. Thank you.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt Show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt Show.